Hey everyone, welcome to this week's recap episode for SNXweave. If you're a new listener, SNXweave is a grants-DAO initiative to improve communication and transparency across the synthetics ecosystem. We'll be giving quick weekly recaps of news and important updates from the Spartan Council and core contributors. As we get closer to the end of the epic, we'll be discussing more in depth the individual outlooks, voting trajectories, debating arguments, and overall values of various DAO members in order to help support well-informed voting around election time. In today's episode, we're going to be discussing the momentum of several SIPs, 2 SIP presentations from this past week, and some exciting upcoming content from SNXweave in anticipation of the elections. So let's get started. Jumping right in, on last week's episode, we discussed SIP 173, the Synth Upgrader contract, which was to be rejected in favor of SIP 174, the proposal for redeeming deprecated synths that was presented last week. SIP 173 was officially rejected this week, and SIP 174 was voted on and approved with 6 votes in favor and none against. This SIP is now in the process of being implemented. SIP 158, to deprecate inverse synths, SIP 166, to remove SCEX, ICEX, and add SCFi, and SCCP 124 to rebalance and rename SCEX to SCFi are all sitting and approved and will be executed once SIP 174 is live. SIP 175, to fund maintenance for the protocol DAO, was officially rejected after last week's presentation, and Justin will be revisiting it once the Treasury Council is created. SIP 155, to deprecate the SDAO, however, which was also presented last week, has been open for voting. Synthetic futures are also progressing well. Jackson said he is working on it with Anton, Clem, and Liam. They've got an internal alpha up and are working on simplifying the mechanism to get it up on Kovan OVM for testing within the next 1 to 2 weeks. The link wrapper SIP has also passed through its testing stage and is now going through some final contract refactoring before sending it to audit. Jackson is also working on writing the specs for the debt shares SIP that we discussed in our first episode, and he is currently working out the mechanics of the calculations. As a refresher, this SIP will serve as a way of distributing collateral from positions flagged for liquidation to SNX stakers by having them take on the debt rather than liquidating their collateral. This will be crucial in helping unify the L1 and L2 debt pools. Last week, we also discussed SIP 120, the Atomic Exchange Function SIP that was formerly known as the TWAP Exchange Function. Due to changes made after its approval, it was moved back into feasibility and presented again by Brett this week. Since it was first presented, Uniswap v3 was released, so a few questions have been raised that caused 3 major changes to the SIP. The first change was switching the DEX-based Oracle over to Uniswap v3. Brett explained that this change is critical as it simplifies the entire smart contract interaction. He explained that previously, Uniswap v2 had a TWAP mechanism in it, but that made it harder to keep the price up to date. You would often have to pay bots or run a bot yourself to continuously checkpoint various pools on v2 to get the time-weighted average price. Now on v3, it's built into every pool natively. The second change was the addition of Uniswap spot pricing. Initially, only the TWAP from the v3 pools was used, but since then, Caleb has determined that it is safe to use spot in addition to TWAP. The reported DEX-based price of a synth will therefore be an aggregation of Uniswap v3's latest price, spot, and a TWAP based on a configurable window, and then compared against the current Chainlink rate. The last major change to the SIP was the addition of a proxy for volatility. This serves as a way to further decrease the risk to the debt pool during periods of clear market directionality. A volatility circuit breaker will therefore automatically disable and re-enable atomic exchanges for given synths based on its perceived volatility. This circuit breaker uses the number of Chainlink updates over the past n seconds as a proxy for volatility. If there are more updates than the configured threshold, the synth is deemed too volatile. Brett said that there will need to be a bit of trial and error to find the right volatility threshold that correlates well without clogging the mechanism. Voting for this SIP is now in progress. The other SIP that was presented this week was SIP 169, proposed by Jordan to deprecate low-volume L1 synths. We discussed this SIP briefly last week, as its motivation is to prevent exploitation of low-volume synths by deprecating them on L1 and better solving these front-running and manipulation risks on L2. The idea is that this allows for a chance to reevaluate the synths that will be launched on L2 as we start to roll more out and get comfortable with the L2 instance. Jordan has gotten some feedback from Curve and D-Hedge on their preferences as to which L1 synths should remain, in addition to Andre's request to keep 4X synths. The list of exact synths to be deprecated is now complete and can be viewed in the SIP proposal. Take a look at our blog post for more details and for a link to SIP 169's proposal page. Voting for the SIP is also now in progress, and once approved will work in parallel with SIP 174, which will greatly simplify the deprecation of these synths. There are also several SIPs sitting and ready for execution this week. First, SIP 167, L2 Bridge Governance, just went through the audit and is done for the most part. But Justin is still getting some feedback and is hoping to roll it out next week with the MRFAC release. SIP 149, Deprecating Binary Options, is ready to be executed. We discussed this SIP last week, where Daniel suggested handling it manually by creating a contract that allows people who have longs or shorts to just withdraw some SUSD from them. Jordan will be working with Daniel to fund the wallet in the proposal and get this going. Lastly, SIP 135, for shorts on L2, is just about ready. Though still sitting and approved, Mark says this SIP is going through its last few tests and is scheduled to be looked at by the auditor next week. In addition to the previously mentioned SIP 174, a few other proposals were also voted on and approved this week. SIP 170 for inflation diversion for L2 incentives and SCCP 133 for increasing volume partner rewards were both approved, with 7 votes in favor and none against. SCCP 134, which proposes reducing the L2 target C ratio, was also approved this week, with 5 votes in favor and none against. There are also 2 SCCPs where voting is currently in progress. SCCP 136, to increase L2 inflationary rewards to 50,000, and Rafa's new SCCP 135, to allow for continuous account merging of any balance of escrowed SNX. And lastly, now that we are officially a month away from the end of the epic, it's time to start thinking about voting. In the coming weeks, SNXweave will be hosting a panel-style podcast for current Spartan Council members and one for select Spartan Council candidates. Qualification standards for the second panel are still being worked out. However, both should prove to play critical roles in informed voting by bringing visibility to the stances and perspectives of Spartan Council candidates. So expect more information soon on this front. And that's it for today's updates. Be sure to check out our weekly blog post, share this podcast link, and let us know what you think and what you'd like to hear more about from SNXweave. Thanks for listening.